Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, February the 13th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, but this week we do have a lot of different kinds of economic data points coming out and a lot of Fed governors speaking. Basically, the Fed has pretty much a green light on raising interest rates throughout this 2017 with the stock market at all-time highs. Can't hurt to raise rates in their eyes when the market's this high. So keep that in mind. That's probably going to be what we're hearing from most of these Fed governors this week. We've got Yellen speaking, I believe Fisher speaking, Harker, and a few others throughout the week. So keep that in mind. Then onto the overall markets. We've got crude oil crushing right now, down about $1 on the day, giving up all of Friday's gains, back below this value area, high area, which is acting as resistance. This is really consolidated a lot, but at the end of the day, there's been not a whole lot of volume up here. So market very complacent with where it's at up in this lofty range of the $52, $53 area. Then on to the overall markets, we've got gold futures down again today as the broader markets are up. Most of the equities are back below that 200-day moving average. So we could see a little bit of pullback all the way down to this 50 moving average. That should act as support, and if it breaks below this area right here, it is looking to probably go down and test the $1,000 mark. So keep that in mind. That definitely if it gets below these, but this is going to show more bearish sentiment if we get below this area right here at let's call it 1180. Settlement below that would be very bearish for gold. Then on to the bonds. They're also off a bit today, not quite a point, but very close to it. And as the broader markets start rallying, the equities and things of that nature, we could easily see bonds go down here and test this 147 handle in the next few weeks or so. So breaking back below all of the moving averages in the last couple of days. Then on to the Dow Jones Industrial Average, a bit of a gap open here to the upside. The market is relentless right now to the upside, up 134 points and creating a new all intraday historical high. So keep that in mind. Even a settlement where we opened would create a new all-time high for the equity in the Dow Jones and again in the NASDAQ. Just straight up unabated rally for the most part in NASDAQ, up about 25 points on the day and right on the highs of the day as we speak. E-mini S&P, another situation, up big again today. Looks like we could start seeing some volume taper away with these historical highs. It's really getting kind of thin up here, a little bit overextended to the upside, it looks like here on the chart. But the E-mini S&P's up 11 on the day, and as you can see, just off of the highs by a couple of ticks, maybe 1 point. I think we just printed that as we started this video. So E-mini S&P's up almost 11 points on the day, but on their highs of the day for the most part. Then we've got onto the trades that I've done. Now, if you remember with Citi a while back, I was talking about if the Fed starts raising interest rates, the banks are going to be the ones that are going to be, anybody who deals in interest rates in a sense are going to be ones to benefit from it. Our MasterCard, Visa, things of that nature, and the bank stocks are going to all do very well in a rising interest rate market. So I did a poor man's covered call in Citigroup, which is ticker symbol C, and if you remember, I have on the SEP, long duration, 45 calls, and I had sold the February 60 calls to cover that. Well, we're getting really close to that. February is pretty much behind us for the contract, only about 4 days left in there. So I decided to roll those 60 calls out in time and up in price. So it's nice because I've gotten this rally that I'm able to do that. So it increases my probability of profit, lowering my overall basis on what I paid for this trade originally, which is exactly what we want to do. So I rolled those February 60 calls out in time to the March 62 and a half calls, collected another 16 cents for that. So I'm lowering my overall basis on what I paid for those 45 calls, and that's a good scenario, great example of how we roll out in time and up in price, still collect some credit to lower our basis, increases our probability of profit by lowering that basis. It also allows for a higher profit potential. So that's what we're doing with that one, and it's working out quite nicely. Then on to Colgate Palmolive. Colgate Palmolive, I had on a long call spread in there. Didn't do it very big, and did the 65, 67 and a half call spread. Originally, I paid 85 cents for that trade, right in line with our rules for the long call spread that I talk about in these webinars, and sold it out for $1.73. So got 50% of my max profit on that, and with this big move on Friday, it was looking pretty good. Today, with the theta decay, helped out a little bit, but I started seeing this pullback, and I decided to take my profits and run with that one too. Then Oracle, this is one I'm actually trying to get out of right now, and we did this on the short call butterfly webinar, or we did this for that example, and I did the February 36, 39, 42 and a half call butterfly in there, and with that trade, I originally sold it for a credit of $1.70. Trying to get out right now for about 90 cents. That's a little bit better than my profit potential target on that. But at the end of the day, this is moving quite nicely. So if I can get it up into the 42 area where those calls go into the money, that would make it very close to, my a little bit better than 90 cents even maybe at that point. So trying to get out of that today, most likely going to, just because with those 36 calls that are in the money, I want to kind of get out of those and not really have to worry about it. So looking to roll out of that trade for a little bit better than 50% of my max profit on that one. So that's Oracle. That's about all I got for you guys today. Friday's webinar is going to be on the broken wing put butterfly. So check that one out. We're going to be able to completely negate all risk to the upside with this trade. I'm going to show you how to increase your probability of profit with that when the right environment is to implement that kind of trade. So go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.